Hey, how is it going, everyone? I'm going to go over today's price action, today's daily plan, the making of the daily plan, and that's it, right? We'll take a look at the intraday order flow. So I post the daily plan, kind of the steps of it here on YouTube through the community page, as well as on StockTwits. So feel free to subscribe or follow me there if you would like to follow along. So for today's daily plan, as every other day, I start here on this chart. What is this chart? This is a TPO chart. TPO stands for time price opportunity, and you'll also hear them called market profile charts. So each one of these, chunks of letters, if you will, these are profiles. And what the profile charts allow us to do is they make the market auction more palatable. So we look at each of these profiles, this one here being for this cash session, this one here for the overnight session, here's for Friday session, and so on and so forth. So what we do is we look at the shapes of the overall profiles. Here, not the cleanest shape ever, but nonetheless, it still is a capital D shape. We have this huge TPO period from the open 30 down here. Again, it's not the cleanest, but it is a capital D shaped distribution. What does this mean? Well, capital D shapes or B shapes, lowercase b, uppercase b, P-shaped profiles, they all mean different things. We've been over capital D-shaped profiles. This is a balanced session, which is to be expected, right? Why? We have CPI tomorrow. Not only do we have CPI, but we also have, as you can see over here, contract rollover. So you have some traders trading this contract. You have some trading the next, which is the, this is H, and I believe next is M. Don't quote me on that. And that's why we see so much range, right? Liquidity on the contracts aren't as much since you have liquidity spread between the two. And that's why we did see, so much range during the overnight session and Sunday session, of course, and today even. I did not trade today. I did not take any trades. I haven't been active, as subscribers would know, or followers on StockTwits. I've been in the middle of a move, and I'm starting to finally get settled in enough that I have the time for YouTube. I've been as active as I could be in the room, still providing plans and whatnot, recaps, reviews, and all of that. So today's price action. 1 second, let me just pause here. Sorry about that. All right, so from here, the TPO, this is always my step one. I check what the overnight session, in this case Sunday, and the overnight session did. And from here, I come over here. This is my favorite time frame. Anyone who's been watching for a little while knows what we're looking at. These are footprint charts. Footprint charts allow us to dissect what's going on within candles, right? They give us a lot more information than your standard candlestick charts. So this is a 4-hour time frame. Now I use 30 minutes, 5 minutes, daily candles, etc. But for my step 2 of the daily plan is always the 4-hour. I believe that we could take the most information, or most useful information, I should say, from the 4-hour. So things that I look for here, on the TPO, I look at the tops, bottoms, overall shapes of profiles. I look where value area highs, value area lows are, points of control. Here, I'm looking for things such as an offer. What's an offer? The selling imbalances. So if I just scroll back, for example, structurally, one should know that you don't want to be a seller at this time over here at 4,000s. And what do we see? We see an offer being built here. We have a lot of selling imbalances over here. And at the same token, we do have a bid. So what happens? We come over here, we pop out all these low slamming shorts, run them, and then we can continue the overall trend, which of course is down. So I'm looking at things like that. I'm looking at, do we have trapped volume? So all these buyers, the bid that we were just looking at here, right? All these buyers, they're trapped. We're trading lower, right? I'm looking for trap volume, significant bids, significant offers. Is one side aggressive? Are we moving up on the tape? Is a bid moving up? Or is it the other way around where we have an aggressive offer and they're moving down? Do we have a passive offer who's just sitting at a price level, taking in anything that is given to them. All these different things mean different things, and they allow us to build on the context that we learned from part 1 on the TPO. So from here is my step 3, and it's always these 3 steps, and this would bring us to the daily chart. And now I'm doing the same exact thing here, but just looking at larger time frame to participants. Do we have a major offer, a major bid? Is one side aggressive? Is one side trapped? All that fun stuff. Again, all mean different things, but now looking at these larger time frames allow us to build on our knowledge and also build confluence between our different time frames and tools. So using all these things, using market auction theory, right? There's more that goes into it that we explained in the room, allows me to create the daily plan. So let me pull up StockTwits again. Here we are. So today's daily plan was, of course, this. Now, we didn't interact with any of it. We had a balance day. So as you guys know, balance day is not near key inflection points. I rarely trade, right? Why? It's just more risk. It's riskier to trade at those levels, and for one who wants to trade as a career, over the long term, you have to minimize your risk in the markets. So taking riskier trades, you're putting more risk on, right? Not only that, but being that I'm coming off of a move, I'm still getting adjusted in a new place. You know, I'm not rushing in to trade. Just not a smart thing to do. So that's about it. Sorry, there's nothing really much to go over. We could actually take a look at the 30-minute footprint chart and just take a look at this intraday order flow. So of course we had this open candle, open drive up. We had a bid down here that we could see held, close, and so once we close this 30-minute candle above initial balance for those who don't know is just the first hour of trading, we have, as we could see, a lot of volume trapped here. We revisit, they provide a floor, and we continue the trend, short-term trend, looking at the 30-minute chart, which is up. And where do we continue up to? Let me just erase this. Alright, so we continue this intraday trend to where? Well, we could see a lot of trap volume. Why is this volume trapped? Well, we started trading down here, and when we trade down here, anyone who's buying up here who did not exit their positions already is trapped, and that's why we're starting to see some resistance already. It's always important to remember when you're trading in the markets that markets are fueled. You know, people like to say red ties or blue ties are manipulating, or algos or banks, or you know, all this stuff that you see on StockTwits and anything like that. But at the end of the day, it's not true. Markets are moved by poorly positioned participants, right? So down here we see a buying imbalance, but we also see tons of selling on the tape, right? So once we start to pull above these sellers down here, they're trapped, they have to cover, and they provide fuel for the up move, right? It's just very simple. Just poor positions provide fuel for moves, right? So you always want to ask yourself who's trapped, where, and I think that will help you a lot in your trading rather than basing it off of simple, you know, double tops, double bottoms, or whatnot. You know, MACD, RSI, all that stuff is all lagging indicators. The only thing that really matters is the tape. Who's selling and who's buying and where, in what quantity. Do we have exhaustion? You know, exhaustion at the lows. Look, 171 contracts, 56 contracts transacted at the lows. When we compare that to 1,500, 1,300, 3,900, you know, that's exhaustion, right? Not a lot of people are willing to transact anymore down here. We're going to go up. Pretty simple. Come down here, run some stops of people who are trying to position the longs up here, and continue up. Very, very simplified. There's more nuance, right? You need to have not only framework of your trades, you know, I'm playing off these trapped participants, or I see a zero print, there's exhaustion, I want to go long or short off of it. You need context and where we are in the overall theme of the market, where we are structurally, and that's where a lot of the TPO and market auction theory comes in handy. So if you're interested in this type of approach, I'll leave a link to my website in the description. I have a very, very small Discord room for those interested. If not, I'll see you guys in the next episode on YouTube.